Today is January 14, 2024, part 2 of this video, which is dollar index and its components and also USD 10-year treasury yield. I would request people to see part 1 of the video, which is Dow, Nasdaq, S&P, FTSE indices, and then see this video also. First the level, then we go into the discussion, right? Dollar index closed at 102.151. Almost flat. Euro USD 1.0949, 0.1%, more or less flat. GBP USD 1.2751, 0.3% up, flat. USD JPY also flat, 144.90. USD INR 82.857, 0.3% down. So overall in this year nothing much has happened till now. But what has happened? Dollar index has formed Doji. Last week, if you see, dollar index has formed, and before we go into that, two things I always say that. One is that dollar index and its components, particularly Euro USD and GBP USD, moves in opposite direction. Because this goes up, that will go down, or because that has gone down, this has gone up. You can say that way. And USD JPY moves in more or less an identical pattern as that of dollar index. And second thing is USD INR, not part of dollar index, but we cover because it is from an Indian perspective. We are interested in it, which is why we cover that, right? So dollar index, what happened? Dollar index formed last week. It formed a solid green candle just above the Bollinger lower band. It managed to hold the Bollinger lower band. So USD JPY also formed the same candle. This week it formed a Doji. Both formed Doji. Because it formed a Doji from a lower level to upward side, the Euro USD and GBP USD formed a Doji from a downward side. It formed a red candle last week. It formed a Doji this week. So dollar index is now decisively in the weekly chart. It is below the 200 week simple moving average and exceptional moving average, which means Euro USD and GBP USD both are above that. Okay, so it is below, 200 week is acting as a support for dollar index. The 200 week simple moving average and exponential moving average is acting as a resistance for Euro USD and GBP USD in the weekly chart. In the monthly chart, of course, dollar index is above all the simple moving average and exponential moving average, which means Euro USD and GBP USD is below all the levels. Whereas GBP, in the case of GBP, it has formed, it is above all the simple moving average and exponential moving averages in the weekly chart. In the daily chart, it is above the 200-day simple moving average and exponential moving average, but below the 50 and other 50 and 100 simple moving average and exponential moving average. That is USD JPY. So whereas USD dollar index is now moving above the Bollinger upper band, which means there is some strength that is coming in. Who is then losing? Somebody has to lose, right? You can see that USD JPY is moving in identical pattern, which means USD is gaining strength against JPY, or JPY is losing. Hence, dollar index is having the strength. Further, we have reiterated many times, the dollar index has a very strong support of 200 week and also the 50-month moving average, which is somewhere around 98 levels. So it will not break that easily below that level. That we have reiterated many times. So overall, this is how the dollar index and the key components are. Next is USD INR. USD INR, what happened? USD INR, as I said, the rates is USD INR forms a solid red candle. It has formed a solid red candle. It has formed a solid red candle in the weekly chart. In the monthly chart also, it has formed a red candle, but it is forming, we have told many times, it is forming a rounding top. But here, the key levels are being held. Of course, in the daily chart, it significantly broke below all the levels, excepting that the 50-day simple moving average and exponential 200-day, that is acting as a support. That's the only level that is available, but we expect strong recovery coming next week in the USD INR. If that happens, we can see a good up move in USD versus INR. So overall, that is how it is. And I would request you to see part 3, where we will be covering US 10-year treasury yield, Brent and MX. Thank you very much.